In the last couple videos, we talked about GE Vernova and Vertiv, where GE Vernova is more of the about the power generation and grid side of the AI infrastructure trade, and Vertiv was more about what happens on the inside of the data centers, the power management, cooling, uptime, and reliability. Today, we're looking at a different way to study this theme. AIPO is the ticker. It's the Defiance AI and Power Infrastructure ETF. And the reason why I like this as a teaching video is simple. Not everybody wants to pick one winner, right? And it's hard. Some investors don't want to decide between GE Vernova, Vertiv, Eaton, Quanta, Nvidia, utilities, power equipment, any of the grid infrastructure plays or the data center names. So they just want a basket. And honestly, there's nothing wrong with that. But here's one important part: a basket doesn't mean that there's no risk, okay? It just changes the type of risk. So this video is not go buy the ETF. This is going to be a video that I'm going to show you how I think through a thematic ETF. What does it own? What are the costs? What's the theme? Where does it overlap? What are the risks? How does it trade? And maybe how I personally think about using something like this. Do I own AIPO? Is it on my radar? But as always, this is not financial advice. This is a framework for what I'm doing. Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. All right, so let's start with AIPO. What is it exactly? So, AIPO is the Defiance AI and Power Infrastructure ETF. So, if an ETF is an exchange traded fund, that just simply means it's a basket of securities that trade on the stock market like a regular stock. So, it's different than like a mutual fund used to be. Mutual funds weren't really traded on the exchange, but you could get them, but they're very illiquid and whatnot. So the ETFs make it a lot more able to buy and sell. So instead of buying one company, you're buying a basket of companies through one ticker. In this case, AIPO is built around the intersection of, say, artificial intelligence and critical power infrastructure. Okay. Defiance says that the ETF provides exposure to companies involved in AI hardware, data centers, power infrastructure, decentralized energy, electric grid advancements, and related power equipment. Okay. Now, let's translate that into some human language. AIPO is trying to capture companies that may benefit if AI keeps driving demand for chips, data centers, electricity, grid upgrades, cooling, and power equipment. That's why it's the right fit for GE Vernova and Vertiv videos, right? GEV is just one piece of the chain. Vertiv is another piece. The AIPO is the basket approach. It gives one ticker a broader AI infrastructure theme. But remember, one ticker doesn't mean one simple risk. There's plenty to be understood here. All right. So, what the heck is a thematic ETF? So, a regular ETF is a basket of securities that trade like a stock. A thematic ETF is a basket built around specific trend or an investment theme. Okay. So, in this case, the theme is like AI plus power infrastructure. Now, that sounds great, but where do investors have to be careful? A good theme doesn't automatically mean it's a good investment, right? I mean, it's one of the biggest traps in thematic ETFs. The story can be real, but the holdings can be expensive. The theme can be powerful, but timing can be bad. The basket can reduce a single stock risk, but it doesn't remove the market risk. So AIPO tracks market vector, US listed AI power infrastructure index. That's what it does. Okay. Defiance says that it's an index tracked US listed companies that derive at least 50% of their revenue from AI hardware, data centers, power infrastructure, or related sectors. The index is a rules based and rebalanced quarterly. Uh, that comes right from the Defiant ETFs. So that's important because this is no longer managing, sitting there every day, hand picking stocks, right? It follows a set of rules. The lesson is simple. So before you buy this theme, understand the rules behind the basket. And the AI power infrastructure sounds great, but honestly, you still have to do your own due diligence of what you actually of what they actually own before you're investing in it. So here's why AIPO is interesting. It's not just a chip ETF. It's not a utility ETF either. It's trying to capture multiple links in the AI power chain. So semiconductors and chips are one piece, data centers are another piece. Then you got your cooling, power equipment, your grid and transmission, power generation and utilities. And that matters because AI build out is not just one single bottleneck. The bottleneck can move. I've been talking about this bottleneck in several of my videos. And the one point is it might be chips on one day, it could be memory or cooling the next day, electricity, or the power grid generation or the connectors and power equipment. So the AIPO is trying to own exposure across the broader chain. So in simple terms, this is a way to say like, well, I believe AI needs more infrastructure, but I don't want to be have my bet on any one company or any one a part of this AI. This is where this is going to benefit, right? Because the next question is for an investor should always be like, okay, so what's actually inside of the basket? What does the ETF actually own? All right, now let's look at the AIPO, what it actually owns, because this is going to matter because the name of the ETF is not good enough. You always want to look under the hood, right? So, as of the latest Defiance Holdings data, the top holdings include GE Vernova, Vertiv, Eaton, Quanta Services, Bloom Energy, Broadcom, Nvidia, uh, Chemico, Constellation Energy, and AMD. These are the holdings. They're all subject to change, of course. They're following a different structure. So this is pretty a good example of the AI power chain. GE Vernova gives you the power generation and the grid exposure. Vertiv, of course, we talked about data center power and cooling exposure. Eaton is the electrical equipment and power engagement or power management rather. You got Quanta that gives you grid services, infrastructure build out. Bloom Energy gives you power exposure, on site battery type stuff. Broadcom, Nvidia, AMD, those are all the semiconductors. Chemico is a uranium exposure. Constellation Energy gives you utility and power generation exposure. So when somebody asks you what AIPO is, the simple answer is just a basket of companies tied to AI, data centers, electricity, grid infrastructure, power equipment, utilities, energy, and semiconductors. But here's my version, right? It's not magic. It's not a basket, or it's not, I mean, it is a basket. It's you know, it's you better know what's inside the basket before you buy it, okay? Because honestly, if you don't look at the holdings, you're not really investing. You're just buying a label, right? So look under the hood, see what's in here. These are the companies that are in here. These are companies I'm making single videos for. So these are all, in my opinion, these are all top-notch companies to be involved with. You don't have to pick one. You have AIPO. So, why do investors like ETFs? The basket can make life a little simpler, honestly. Instead of trying to build a long watch list and decide exactly what company that you're going to win with, you can get exposure to like a broader theme through one ticker. So that can reduce a single stock blow up risk. If Nvidia stumbles or if a different company stumbles, it doesn't necessarily bring down the whole basket of names in the ETF. It also lets investors participate without trying to predict the exact winner, right? Like If the AI power infrastructure is that bottleneck, that maybe that makes sense right now, because this theme has a lot of moving parts. Because here's what people sometimes forget: an ETF changes the type of risk. It doesn't remove risk, but it reduces a single company risk, but it also gives you some upside if one individual stock becomes a huge winner. You can possibly miss that single winner. There's some of the risk. But if you still own the weaker names inside the fund, it's going to kind of pull down that theme. So you may have overlapping risk. If you already own GE Vernova, Vertiv Eaton, whatever, okay, or any of their other top holdings, you still have a theme risk. Uh, if AI infrastructure enthusiasm cools off, or the ETF can still get hit. So the basket approach is useful. It's not a free lunch. ETFs can make trade easier to manage, but again, it doesn't make your homework disappear. The bull case for AIPO is pretty straightforward. If AI keeps growing, then AI needs chips. Those chips need data centers. Those data centers needs power. The power needs grid infrastructure. Those facilities need cooling, power distribution, electrical equipment, backup systems, reliability, electricity. Uh, the AIPO owns multiple companies tied to different pieces of the chain. So if AI power build out becomes a multi-year trend, AIPO could be one of the easier ways to participate. Not necessarily the highest upside way, but it may be a simpler way. You don't have to pick just one company, right? You don't have to decide whether GE Vernova beats Vertiv, or whether Eaton beats Quanta, or Nvidia beats Broadcom. You're basically saying, I want exposure to the theme. That's the bull case. One ticker, broad exposure, AI plus power infrastructure. And this trend keeps moving from chip to data center to power to grid to cooling. The basket like this can make life a little easier for investors. It makes sense for you. And if you want exposure across the chain, you have it. But again, the bull case is not the whole story, because the fund can still be expensive, the theme can still be crowded, and timing is always going to matter. All right, let's talk about the risk case. My videos, I always give a bull and a risk. First, the expense ratio is 0.69%. That means you're paying an ongoing fund fee for the ETF. It's not outrageous, really, for a thematic ETF, but it's still a cost, and the costs matter over time. So, second, the AIPO is a very young ETF. It was launched in July of 2025. So, it doesn't have a very long track record yet. Third, this is a concentrated theme. You're not buying the whole market. You're buying a basket focused on AI power infrastructure, data centers, utilities, energy, industrials, and technology. Now that can work beautifully when the theme is hot, but it also fall off real hard if this theme cools off. Fourth, holdings can change at each rebalance, right? So what you own today may not exactly be what you own later. That's usually a good thing. Typically, when they rebalance, they're rebalancing into better companies, typically. But so there is some overlap risk as well. If you already own GE Vernova or Vertiv, Eaton, or any of these other companies, then you might not be as diversified as you think, right? You might not be as diverse as you think. You have several. If you own a couple of these companies individually, then you own the AIPO. You're kind of double dipping there, which is fine, but it's not necessarily. It doesn't lessen your risk, that's for sure. So here's one more ETF risk people forget about, is the trading cost. The expense ratio is not the only cost. You also have a bid ask spread. I was listening to the radio today, and I was listening to a guy on the radio that was talking about bid ask spreads in ETFs. And they had one heck of a cool point about how this bid ask ratio plays out in ETFs, and it's kind of a little bit of a crazy concept, but it's there and it's real. So the bid is what buyers are willing to pay, and the ask is what sellers are willing to accept. Now the difference between those two, it's called the spread, right? So the spread could be wider depending on the ETF, the time of day, liquidity, and market volatility. So the ETF trading guidance from Schwab says that investors should be careful around market open and market close because spreads can be wider. And it generally does favor limit orders for sure over market orders for ETF trading. I know in Robinhood, you can't even trade market orders for the first 15 minutes of the day. At least I'm not able to in my Robinhood account. It's like Robinhood's kind of protecting you, and I'm guessing a lot of other brokers might do that too. They make you put a limit order on when you're trading in the first 15 minutes. So if I'm buying an ETF, I don't want to just smash a market order like I'm in a hurry, right? I want to check the spread. I want to use a limit order. I want to understand how that ETF actually trades. This is the real teaching point here. I don't just ask, do I like the ETF? Ask, what does it own? Ask, what does it cost? How liquid is it? How wide is the spread? And am I using limit orders in being a grown up, right? This is the risk case. Good theme can still be a bad buy. The wrong time with too much overlap or sloppy execution. All right, now here's how I would personally think about using AIPO. This is a framework. This is not a recommendation. Okay. So AIPO traded around 31 bucks on July 10th of 2026. For me, above 32.50, I'm not chasing. All right. That doesn't mean it can't go higher. It just means I don't like chasing through strength after a big move. So my starter research zone is what I call it, would be around between 30.50, 31.50. That's where I'd like to start maybe studying it, especially if I want a small satellite exposure to the AI theme. A better pullback zone would be like around 28.50 to 30 bucks. This is where the risk reward may get more interesting in this or in my thesis. If my thesis is still attacked, um, a deeper reset zone would be around 25 27. That would be a more of a high conviction accumulation zone for me, but only if the AI power theme still holds, which I expected to, right? I still think we're in early innings here, but so here's the important part. Um, I want to use AIPO as uh, I wouldn't use it rather as an oversized position. Uh, for me, this is more of like a satellite position, a theme position, something I can sit around the edge of a portfolio if I want exposure to the AI infrastructure without picking one winner, right? Um, I'd also check for my overlaps. If you already own GE Vernova or any of the other companies that are in here, are you really diversifying, or are you just buying more of something that you already own? And because this is an ETF, I would also check like how it trades. What's the bid? What's the ask? Is the spread reasonable? Um, am I using limit orders? I know this sounds small, but it matters. Look, disciplined investing is not just picking the right theme; it's also the execution. How you buy it matters, right? Your position size matters. Price, um, and order type matters. So for me, small, discipline, theme exposure, not chasing. I'm checking for overlap, using limit orders. That's my plan. All right. So here's a practical income investing takeaway. AIPO is a simple way to study the AI power trade. You get a basket exposure instead of betting everything on one stock. That can be useful, but you still have to understand what you own. You need to know the holdings. You need to know the cost. You need the overlap, theme risk, how it trades, the timing of it, and for me, APO or AIPO is definitely on my radar. I do own it. To put it out there. I think it's worth researching for sure. But it's not a free pass to blindly buy this AI theme. Okay, this is still an investment. It still carries risk. If you already own a bunch of these top holdings, you may already have the AI power exposure, more of it than you realize. So the lesson is simple here. AIPO may be a useful basket, but the basket still needs discipline. Okay. Find a theme, understand the holdings, respect the risk, watch the price, check the spread, use limit orders. I know I keep going over and over. I apologize for that, but I really feel it's important. You know, a good story can trick you into skipping the homework. So before I wrap this up, I'm going to take a screenshot of the AIPO ETF snapshot on the screen. It's something that the APIO snapshot is my gift to you. I'm going to be making this on all my videos. It's going to show you can screen, or you can pause it here. You can save it, take a screenshot. I know that this is something that you guys will be able to use. Um, so if you like this video, please hit the like, subscribe, drop a comment below. What should be my next breakdown? Eaton, Quanta, or something else? This is practical income investing on my radar, worth researching. This is not financial advice. Thank you so much for watching, and enjoy my snapshot.